Hello, everyone, and thank you for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobi. Thank you so much for your willingness to take a few minutes with us here. Happy New Year to you. I hope that your holiday season and New Year's holiday were good ones, albeit I'm sure they were quite different than in years past. But thank you again for sharing time. I hope that the update that we had there for you between Christmas and New Year's was helpful to you. We're going to talk a little bit more about that COVID-19 related financial relief legislation, which made its way through Congress right at the year end there, and make sure that you're aware of the details so that you can be aware of them or you can share those details with others. But we want to make sure that you're aware there. We're going to talk a little bit about the changeover in the administration in Washington, D.C., also about the changes in Congress. And frankly, things got tighter instead of further apart in terms of the split between the two parties. And then we're going to end up a little bit with just some thoughts for 2021 relative to where we see the markets for the current time. But let's dive right in. COVID-19 related relief legislation, as we said in our previous update there, we've been waiting several months for it. If you've watched any of these previous updates coming to you for the Oakwood update, I've been talking about this for several months now. But it finally did come through towards the end of last year, and several things that we want to make sure that you keep in mind. First of all, just like there was with the CARES Act in the front end of 2020, there are going to be direct payments again, meaning that those direct payments, if you income qualify on your 2019 tax return. So the first ones were depending more on 2018 because most folks had not filed for their 2019s yet. This one, 2019 tax return dependent. If you're an individual, $75,000 and less. If you are a couple and you file jointly, then you $150,000 and less, up to $600 per person for folks who fall into those income brackets. Now, we've heard from the Treasury that some of those payments have already been distributed, so you may have already received them. If you haven't and you believe that you qualify, be patient. This is a logistical nightmare in a lot of different ways in these payments coming from the U.S. Treasury. So be patient on that. It's probably en route to you. You can always check either the U.S. Treasury website or the IRS website if you think you need to follow up and to see what may be good contact points there. So direct payments, again, $75,000 and under if you, on your tax return income-wise as an individual, $150,000 and under if you are filing jointly. Corollary along with that, also payments for dependent children. Dependent children being defined as those who you claim as dependents on your 2019 tax return. Again, up to $600 per child that could come to you as a direct payment there as well. So if you got mom and dad and a couple of kids scenario on your tax return, you can add up those numbers fairly quickly, and it could be a fairly notable amount which may be coming your way. So that's the first big item, direct payments. Second big item, if this applies to you folks you know, with regards to unemployment insurance. If you recall with the CARES Act last year, we had a significant amount of time in 2020 where you were for several months able to get up to $600 per week in additional unemployment insurance. And that ran out in July and August of last year. There has been another allocation made and another decree made as far as the amount of additional unemployment insurance if you qualify again. But at this time, it's not $600, it's $300 per week. So $300 per week, additional unemployment insurance if you qualify in the normal ways for unemployment, and that can include COVID-19 related shutdowns or significant reductions in your professional space. So if you think you qualify or folks you know might qualify, definitely check it out. It is state specific, and I know that just sometimes is mind-numbing. The state unemployment offices around the country continue to be completely overwhelmed. So just be patient there. Sometimes, and this is going to sound a little bit crazy perhaps, sometimes it may make sense to try to access the state unemployment website in the middle of the night. And the reason for that is, we've had a number of clients do this. The reason for that is the web traffic is slower. So you may be able to access them easier online in the middle of the night than in the normal 9 to 5, Monday to Friday kind of space. So just a little tidbit there of understanding as far as the process is concerned. But again, $300 per week additional, very big item to keep in mind if you qualify or folks you know qualify. Right now, that $300 per week will stop in mid-March. Let me say that again, that $300 extra per week will stop in mid-March. So you want to be mindful from a budget planning standpoint, cash flow management standpoint, that even if you are still unemployed at that time, as things sit today, that's going to stop in mid-March. So very, very important to keep that in mind as well. All right, small businesses. Obviously, a number of them really just decimated here over the last year due to mandated shutdowns or mandated reductions in terms of their business capacity. Another funding round through the Small Business Association, through the SBA, has been approved with this last round of legislation. Several items, actually, there are dozens, frankly. By the way, in case you're wondering, 5,593 pages. No, I'm not kidding. 5,593 pages was the bill that was passed at the end of the year. Now, to be fair to our congressional friends, that did include a government spending bill, but 5,593 pages through which you needed to read. So that's why we're bringing you some video updates, so you don't have to leaf through that as part of your nighttime reading. But coming back on point, SBA, Small Business Administration, funding again for small businesses who have been affected by the pandemic. Now, several things different. You saw probably a lot of larger employers and a lot of employers who got 8-digit P3 loans or payroll protection loans during the first round of COVID-related legislation with the CARES Act. Not true for this time coming around. This last round, the limit in terms of the total amount that you can receive in this second round through a payroll protection loan or a P3 loan, $2 million. Again, really intended to be focusing on the smaller employers, which brings me to the next sub point. 300 employees or fewer. 300 employees or fewer in order to be able to qualify for this round of P3 loans. So very, very important. And also an expedited forgiveness process for those loans which are $150,000 or less. Again, an expedited forgiveness process through the SBA if you're at $150,000 or less. So you can see it with this second round here. What Congress was trying to do is to really narrow the focus as far as these small business association or small business loans are concerned, to be focusing on those employers who frankly are probably the most financially vulnerable. Not true in all instances. There certainly are large employers who are vulnerable as well, but really intending to focus on the smallest of the small employers, which again, there are literally tens of thousands of those in our country. So big things to keep in mind there on the small business front. Now, a big tax item. If you are a small business owner or you are part of the leadership team at a small business and you received a P3 loan in the first round, there was actually an unintended consequence that came about from that, whereby if you use those P3 proceeds, those loan proceeds, for business expenses and then deducted those business expenses from your taxable income, you actually could put yourself in a taxable scenario with your loan. Thankfully, Congress erased that. They said you're not going to be taxed if you use those P3 loan proceeds for business-related expenses and then deducted that from taxable income, which is good because we're getting into tax filing time, and thankfully they clarified that. So very, very big deal. Second question that we're receiving a lot with regards to small businesses. If I, a small business owner, received a P3 loan in the first round, can I apply again and get one in the second round? The answer is yes, you can. Now, obviously, as I just went through it, the parameters are different. So let's say you got a several $1 million loan in the first round. The maximum amount that you can receive this time is $2 million. So you're going to have to make sure that you still qualify. But what we're encouraging folks to do, especially if you got one in the first round, go back to the same banker. They got your information. They understand the parameters of your situation, and they will be able to help you to understand if you're going to qualify again for a P3 loan. If you haven't, or if you didn't go through the first round, yes, you can also obviously go through it here on the second round as well. So some very important things to keep in mind. Again, direct payments, not only to individuals, but on behalf of dependent children. And then with regards to unemployment insurance, the additional unemployment insurance, or bonus, sometimes folks are calling it bonus unemployment insurance here, but that ends in mid-March, and then some refunding and some expansion of some small business programs in order to help, again, with this COVID-19 related relief funding. So very, very important to keep in mind, especially if it applies to you, especially if it applies to loved ones. You want to make sure that they are aware and apply for in the most appropriate places. All right. Well, we've only received 1 or 2 questions. That's not true. A whole lot more than 1 or 2 questions about the changeover in administration in Washington, D.C. And also in terms of the races which were run in both the Senate and the House and what that means. Well, frankly, we'll wait and see. There are all kinds of things that can happen, but some important things that we want to make sure you keep in mind. Yes, there obviously has been a changeover in the Oval Office. There has been a tightening in Congress. I mean, if you can believe it, literally the Senate, 50-50. And in the House of Representatives, the majority that was in place with the Democrats has narrowed some. It's not quite 50-50, but almost there. So we're talking about a very, very even breakdown between the two parties in Congress right now. So what does that mean? In a lot of ways, we don't know. We just heard from the president-elect and his team yesterday, as of the time of this recording, about their proposal for the next round of COVID-19 related relief. It's on the order of close to $2 trillion, so a huge desire by the president-elect. Now, before we get too far down the path, that has to get through Congress. So while the president can propose that and push that to Congress, Congress has to take it up and then vote on it. So it's not true that just because the president-elect says that he would like for this to happen, that it automatically happens. And I think most of you know that, but we get those questions periodically, especially because for all the understandable reasons, it hits every newswire on the planet whenever the president-elect's team puts that out there. But we want you to be aware, it goes through the legislative process. It has to. And there are going to be a lot of changes. There's going to be a lot of give and take and the proverbial horse trading, if you will, before the next round of legislation gets through Congress. So very, very important to keep in mind, but just understand that that's out there and that Congress is likely going to take that up relatively shortly after the president-elect gets through Inauguration Day. So just be aware that that's out there. Obviously, just like this last round, as soon as it becomes law, assuming that it does, we'll bring that next round of details to you because it will apply to many of you, and we want to make sure that you have the best information possible in the soonest amount of time so that you can make the decisions which are best for you. But coming back to the administration and coming back to Congress, I think I've shared with you a couple of times on these updates now. There have been both parties in office when the markets have done very, very well and not done so well. There have been times in Congress when one party has been in the majority and the markets have done well, and that same party when the markets have done well. And it's same on the other side of the aisle as well. I say that not to dismiss what a new administration can mean for economic and fiscal policy as far as this next administration is concerned, but it's important to take a look at that in the whole scope. And I think that's very important with regards to your financial plan, because we don't just want to be reactionary. Can we make tweaks? Can we make adjustments? Can we try to massage our plan into what may happen from this administration as opposed to the last one? Of course, that's entirely appropriate, but we need to do it with an extended view, because we're not going to be able just to time things, because so many things can happen between now and whenever the change in law may come into play. So very, very important to keep that in mind. And we don't know yet. We're just going to have to wait and see. And just because one side of the aisle or the other side of the aisle postulates one thing or another, or even from the Oval Office says that they want to do one thing or another, there's a process. And we need to go through that process first, and it very rarely ends out on the other side like it starts at the front end. So let's stay tuned. We're going to bring you the most updated information that we have at all points along the way, so that as those things materialize, if they do, again, you have the most pertinent and updated information, so that it may be, if it is, applicable to you and you can make good decisions on your end of things. All right, so let's talk about the markets a little bit. The markets, from a trading standpoint, have continued to move in a fairly healthy way, which has been very good to see. You heard me talk about, on a couple of different instances now in previous updates, the idea that we're kind of due for a technical correction, and we are. And the primary reason for that is because the market has been trading in a very narrow space. Now, what does that mean in terms of a narrow space? That means that a relatively few number of companies have been moving the indexes, both in a positive and negative direction, over the last year or so. Now, what does that matter? Well, because if you're looking at the indexes, and 2020 is a great example of that, and you see that some of the most popular indexes, like the Dow Jones Industrial Average, like the S&P 500 Index, had good years, you need to peel away some of the layers of the onion to understand what really that means. Because while it looks like that the markets must be doing great, they must be very healthy in order for them to perform that way, well, maybe. That's not necessarily true because of how those indexes are put together. For example, you've heard me say on a couple of different instances, if you've been listening to previous updates, that the Dow Jones Industrial Average is what we call a price-weighted index. Let me say that again. The Dow Jones Industrial Average is a price-weighted index, meaning that if you have a higher per share cost or value, you're going to have much more sway over the Dow Jones Industrial Average than a company that has a lower per share cost. Kind of interesting if you think about it. S&P 500 index, again, one of the most widely tracked domestic indexes out there, is a market cap weighted index or market capitalization weighted index. So what does that mean? That means if you are a larger company in terms of your market capitalization or your publicly traded size, you're going to have much greater influence over the S&P 500 index movements than if you are a company of smaller size. So what does that mean? Well, I like to pick on Apple, just because everybody knows Apple, and they have an expensive stock price, and they're one of the largest companies that's traded on the stock exchange. And I'm not picking on them because they're a bad company or that there's anything wrong with Apple, but just because relative to this discussion, it's an important part of the discussion process. As I mentioned, even though they split, Apple is still a very expensive stock as far as the price per share, not necessarily expensive in terms of the financial metrics that we watch, but in terms of how many dollars per share, it's still pricey compared to some other stocks like, say, AT&T. And it's also one of the largest companies on the planet. So I say that to say that Apple, because it's both a part of the Dow and it's a part of the S&P 500 index, can have an unnatural sway, and I do use the word unnatural intentionally, can have an unnatural sway in terms of how both the Dow and the S&P 500 index perform. That's very, very important to keep in mind because you may say, well, the market's doing great. Well, maybe it's Apple and a couple of its friends which are doing great, which happened to be the case in 2020, which is why I'm bringing that to you. It wasn't true that the broad market did well. As a matter of fact, the overwhelming majority of the market last year did not do well at all. But a handful of very large, very expensive companies had fantastic years. And you've heard me say these names: Facebook, Netflix, Google, Apple, Amazon had huge years. Those also happen to be some of the most expensive stocks and the biggest companies that are traded out there. And so they covered up for, or they masked a little bit, some of the, frankly, challenging years that so many companies had from a stock price standpoint last year. So I'm saying that to kind of keep that in mind, especially as you're going to start to get your year-end statements. If you're looking at particular holdings that didn't do as well, frankly, that was more the norm than the exception. And if you're looking at other holdings that were here and other holdings that were here, chances are these ones that were here had some exposure to those companies, or at least that sector, especially when we're talking about big technology companies, probably had some significant exposure here. If you were down here, probably weren't as much as exposed to technology companies. So very, very important to keep in mind, very important to understand where the market is. And then, of course, the multi-trillion-dollar question: what do we expect for 2021? Well, it's hazy. And most years are very, very challenging to predict. From an index standpoint, we've had two big years as far as index performance is concerned. We're looking at certainly domestic indexes. So there tends to be a reversion to the mean at some point. I shared with you technically that the market is due for a pullback here in terms of the number of dollars going in particular areas. We are due for a technical pullback at some point. It's not to say it's imminent, but we know that that's sitting out there at some point. Does that mean that this year necessarily will be a negative year? No way to know in advance. We obviously are still working through the pandemic, and we're just starting to get distribution of the vaccine. That is going to have a huge effect in terms of where we end up in 2021. So stay tuned. We're going to continue to do these updates, and as we have new data, we want to be able to share those kinds of things with you and to give you the very best of what we have here. Well, friends, as you know, I like to be respectful of your time, so we're going to wind down our time together. Again, I hope this finds you healthy and well. I want to send a special word out to our Steelers fans who had a very challenging week here, or 10 days. That was a tough one against the Browns. And for you Cleveland Browns fans, it is a reason to celebrate. It's been a long time coming, and I hope you enjoy every minute of it, although I know you got a big game coming up this weekend as well. So please, as always, and you hear me say this often, but it certainly bears repeating, at any time and for any reason, please reach out and relay your questions, your thoughts. If you like to chat about the markets, or if you like to chat about more casual things, you know I like to do that as well. But it's always good to hear from you, and I always enjoy hearing from you. Well, friends, again, thank you so much for your time. I appreciate you so much. I'll look forward to talking with you again soon.